Welcome back to another video, everyone. Today I'm going to be showing you guys how I was able to catch QQQ for a very nice downside move today. So as you guys can see, we are on the 3-minute time frame, and I know you guys aren't used to seeing me on such a low time frame, but I've been back testing this new strategy by this YouTuber named the Inner Circle Trader, where he goes over these things called fair value gaps. So on the chart right now, you guys are going to see relative equal highs, and these were made on the 15-minute and hourly chart, where I was looking to see if the market would push higher to grab liquidity, because above those equal highs there are stop losses, and above those stop losses what you want is you want the market to push into them, grab those stop losses, and then have a nice strong move down, which is known as a displacement, which is that big red candle right after where I wrote MSS, and that MSS stands for market structure shift. So the best way to explain this strategy is what a fair value gap is think like you're painting a wall. You're painting a wall, you have a roller, and you push it down really fast. What happens? It leaves gaps, just like price, right? You dip it into the paint, you push it down, you grab the buy side, you grab the liquidity, you push the paint down, and what happens? It leaves gaps still. What do you do when you have to go back? What do you do to repaint? You push the roller back up, you fill those gaps, and then you bring it back down and keep doing what you were doing. Similar as this strategy is it creates a displacement after it breaks market structure, which you could see right there. And we go into lower time frames and draw out the gaps. And then you can see the market pushes back into that gap to grab and repaint over that gap that it created when you were rolling the paint roller down super fast after it grabbed the liquidity, which is where you dip the paint. So hopefully you guys are understanding this analogy a little bit, and you can see it pushed back in, and this is exactly where I alerted my second entry. First I opened a starter. This is where I added most of my position and the reason why is because it pushed into a high area that's where the gap was on the 1 minute, 2 minute, and 3 minute. So where it got darker, those are just rectangles that I put on the 1 and 2 minutes. So that's where I really wanted to add, and you can see it starts rejecting. It filled those orders and started pushing down. Now my price targets were based off the fib levels, and I'll post those in the comments if you guys want. You can see we started to break this uptrend, and my price target is down below there at the previous low that we had, right? And you can see we created another fair value gap there, and that was the larger rectangle was the 5 minute. Here's me checking NQ to see how the market on the tech side was doing. And you can see we pushed back into that fair value gap on the 3 minute, and we continued down. That could have been another average up scenario if you guys really wanted to. Me personally, I just held my contracts and let them do their thing. Now I know I'm going super fast, and I know this is a new concept for most of you. Most of you guys probably heard this term floating around on Twitter. So what I'm going to do is I'm going to actually leave the guy's YouTube link in the description below, and I'll be posting more videos about this soon. And one of our new additions, our head analyst at Samurai Markets, Fair Value CJ, he is actually an expert in this, and we'll be hosting some classes in the near future. But all this information is out there for free on YouTube. Just search up the Inner Circle Trader and you'll be able to see how this is all formed, and I'll be posting more YouTube videos on this concept after I've done more back testing to show you guys. This is one of the first plays I ever alerted based off this concept, and you can see how nicely the market moved down, and I was in puts at this point, and you can see it hits my golden area, my golden zone, which is also the previous low there, which is where I started to scale out profits. You can see it perfectly started to bounce from that area. So if you guys enjoyed, make sure you guys drop a like. This was just a little introduction for you guys to this new concept that I've been learning, and really just wanted to give you guys a new look into how I was able to use this concept, and just a little introduction to it, so you guys are able to maybe look for these gaps, tweet me at them. And just so you guys know, do not go and start using this concept just because you saw me take it, right? Because this required me at least 2 to 3 months of back testing, and today was the first time I felt comfortable enough even alerting, and even this could have been way better setup if I would have played it earlier. So please be careful with this setup. I still use supply and demand all the way through. As you guys could see on the 3 minute, that would have been a supply we would have shorted at anyways, but this was just a little bit more in depth and really explains the candle action and the price action that goes on behind the scenes that we don't really see. So I'll be posting more videos on this if you guys want. I just wanted to put this video out as a test to see if you guys actually enjoyed this type of content, where I record my screen, not my trading screen, but my screen where all my charts are, so you guys can see my exact thought by thought process on my charts compared to, you know, my actual just me being in a trade. So if you guys like that, Make sure you guys drop a like, comment, and subscribe, and I'll see you guys in the next one. Thank you guys for watching.